Welcome to Steve Savant's Money, the name of the game. Hi everyone, I'm your host, Steve Savant, syndicated financial columnist and money gamer extraordinaire. Today we're asking the question, is selling my life insurance policy worth looking at? With President and CEO of the Life Insurance Settlement Association, Darwin Bayston. Welcome to the show, Darwin.
Thank you.
Well, everybody, a lot of seniors have, almost, I want to say 40 billion, maybe in force. Or 40 million, I think it is.
40 billion.
Billion, wow, with the B.
With a B.
And so when I'm looking at this as a senior, I bought this maybe for charitable giving. I bought this maybe for my legacy, for my kids, or maybe for my grandkids. Maybe I bought it because I wanted to make estate liquidity. Maybe I'm on a big tax bracket and I'm going to have a huge estate tax. But for most Americans, those reasons aren't there. And maybe you've been talking about this as a living asset. Most of us think about, well, the only time it's going to pay is when I die, and I still have to make these premiums. If I'm a senior and I can't make these premiums, what is my alternative for my life insurance to turn this into cash?
Well, first of all, let's just think a little bit about what the life insurance industry is. Life insurance has been a part of the American financial fabric for years, hundreds of years. And it's represented a core holding that a lot of Americans have. Now, some people have bought life insurance, like you say, for a specific reason. Some people were sold a life insurance policy. They weren't sure, but they knew the basic thing about life insurance was for protection. Protection from the risk of someone dying in an untimely manner and putting their beneficiaries at hardship. But also, about 100 years ago, the United States Supreme Court judged life insurance policy as personal property. Therefore, it gave it the characteristics that other personal property had and that you can in fact sell it. Now, most people who hold life insurance are not aware of that. So therefore, when they're doing their planning and their thinking, they get this premium notice and they pay the premiums and they don't stop and think, well, maybe I can't afford these premiums anymore. Maybe I really don't need this policy anymore. And it's time to stop and reevaluate what I might be able to do with it. So yes, selling that policy is an option they ought to consider.
Well, I've noticed out on the web there's quite a bit of activity of people saying, look, we're really looking for this. Investors are actually looking to pay what I would call sometimes a premium for a policy that's not being used by a senior. This kind of reminds me of, what's that gentleman that does the reverse mortgages on television?
Oh, Fred Thompson.
Yes, Fred Thompson, his reverse mortgaging. How popular was that ad? What kind of traffic did that drive?
Well, I understand. I'm told that ad creates about 30,000 inquiries a month from individuals, from seniors, who want to know something about a reverse mortgage.
Now that tells me that they need money.
Exactly.
They're looking for different cash reserves.
I look at that ad and I keep thinking to myself, what would it be like if they were walking down the sidewalk talking about a life settlement? What kind of reaction that would get from seniors as well?
Now, I noticed another actress, Betty White, has been kind of a big player in the life settlement market. She's one of the, what I would call probably the spokesman.
Well, she is a spokesman, and she's been a spokesman for nearly 10 years for one of our members, the Lifeline company out of the group. And, she's brought a lot of trust on the level. Everybody trusts Betty White. So she's brought a level of integrity and trust, I think, to the life settlement market that hadn't been there before, or the people are looking for.
I think when I'm looking at this from a senior point of view, I have no more use for this contract. I really don't want to pay any more premiums than I have to. I did not realize that I could actually turn this into cash, that it may, not always, but it may be able to, depending upon how long we're going to live and whether it's a good deal for the investor. But I want to make sure it's a good deal for the senior.
Correct.
And so the first thing I want to know is, when we do a life insurance policy, I notice we have to write down the beneficiaries of that policy.
Correct.
How do I protect the beneficiaries? Under law, don't we have a law that does that? You actually have to notify them?
Well, life settlements are regulated in 43 states, United States, that cover about 90% of the consumers who may have a life insurance policy to sell. Those laws and regulations have embedded in them requirements that the beneficiaries must be notified. In fact, they must sign off on a life insurance sale that they're a part of.
When we come back from the break, I want to talk about how we can walk them through the basic steps of looking at this and seeing if it's worthwhile to look at. We'll be right back after the break. It's not how much money you make, it's how much money you keep. And keeping more of your money is even harder these days with high taxes, fund expenses, and fees for financial advice. And when you consider the uncertainty of the market and the rising cost of living, the purchasing power of your dollar is constantly at risk. But a tax-deferred annuity with an inflation rider can be the most cost-effective way to generate increasing annual income without market volatility. For more information on how annuities may work for you, just email me at steve@thenameofthegame.tv and ask for our free annuity information. Well, welcome back to our second segment. Again, we're with Darwin Bayston, the CEO and president of Life Settlement Association. And I have to say, when I'm looking at life insurance settlements, I'm looking at them as now, wow, first segment, many of our seniors are probably going, I've never thought about this before. So walk me through the mechanics, okay? I found a policy in my safety deposit box,
Yes.
And I have that in my box, and I'm thinking, okay, now what do I do with that? I want to see what kind of numbers or what kind of a bid I would get on this. How would I go about that?
Well, first thing you might do is think about what advisor you would want to contact to help you with that. Life insurance, you bought it from an agent, so you may know an agent or a life insurance broker who would know something about it. So they are probably the first stop. What they would do then is we'll go to a life settlement broker and say, this person has a policy that they would like to sell. And the life settlement broker represents the best interests and operates with a fiduciary capacity, so to speak, to that person selling the possible. So their role is to get the best price they can for that policy out in the marketplace. And they would give them a list of things that they had to bring together. You have to have your policy, you probably a latest statement from the verification of coverage from the insurance industry. You would have to gather all your medical records, because that determines somebody's going to look at how long you have to live. And then that broker would gather all that information, have an application, and send that out to a number of providers.
Now, that's a big point. I want to stop you right there. This isn't just one. You're going to be sending this out to multiple bids. Highest bidder should win. That's what we're really looking for.
That's correct.
And from the time I start this process to the time I finish the bid, not actually getting money, you're just finishing the bid, what's that process time?
Well, that process time could be a couple of months. By the time you gather all your information, you put it out. What they will do is they'll send out the medical information, and they will get a life expectancy report. And that report is basically an estimation of what your expected remaining life will be, and that information is needed in order to price the product, the sale to you. In fact, some brokers have the capability of telling you whether or not that policy is going to be worth anything now, and maybe about how much it will be. Then they will tell you what they're going to do to send the policy out to various providers through what's known as the auction process, so that they compete with each other to pay the highest price that they can get for their client to sell that policy.
Once I've agreed with the bidder,
yes,
they're going to do their further due diligence on it. And so from the time I start and ask somebody to look at this, and the time I accept the bid, and then the time I actually get my check, what kind of downtime all the way across the board on that?
That downtime can vary depending on the particular company that you're working with and the extent whether or not all the information was together at the beginning. So that can vary, but normally it's going to be 4 or 5 month period of time, maybe 6 months. I know there's times when it's been longer than that, and certainly shorter. But interestingly enough, I understand that the average time it takes to complete a reverse mortgage from the time you make the first inquiry until the time is closed is also about 6 months.
So it takes a due diligence process. People have to look at this.
Absolutely.
Okay, now that I've done that, remember, I can do this without any obligation. I may just want to see what's out there.
You may.
And I really don't have to follow through with that. I mean, there's no cost to this from the client's point of view. Is that correct?
No, it's not. It's not from the client's point of view, but the people that the broker that the client's going to work with is going to know that this person's pretty serious about it, because they don't want to go up to the point where a provider has made an offer, and then you have to accept that offer, and they say, oh, well, we were just trying to figure out how much it was worth. I believe that probably what we're going to see in this industry is the growth of companies who can take information in and give you an estimate early on about how much your policy may be worth
All right,
before you go through that complicated
process. Well, let me go down
process.
that road, Darwin, because I'd rather do that. If before I go through my collection of my medical, which that alone could be time-consuming,
Yes.
I want to go ahead and I want to get an idea. He looks, I have my policy, in the back of my policy is I have medical information from my original application. So they're going to see that. They can ask me, hey, how you doing your health now? Of course, I'm not a physician. I don't know my own stuff. I'm going to have to send them the attending physician statement sooner or later. But if I just want to get an idea, here's my policy, it's in force. Here is the in-force numbers, the cash value, the death benefit. Can I get a reasonable cursory bid, a kind of in the game, just to see if I should proceed?
Well, some brokers are offering that kind of a service, but I believe that it will be, sort of a growth industry, because I believe that there will be some short form of medical report that you could, keep in mind. Everyone has to be truthful when they're giving information out in order to get a response back. So if they fill that out truthfully, I believe there's going to be some ways developed by which that process can be shortened tremendously. There are a couple of places where it does take time. The insurance companies are not always responsive very fast to get information back to the seller of the policy, because when you ask for VOC, they feel, well, they must be thinking about selling it, and so that's been a little bit of a contentious thing. The second thing that causes some delay in the final closing, of course, is there has to be a change of ownership form, that there is a registered new owner. But back to the question you were asking before, is there a process by which I can get an estimate? And maybe this is one where you talked earlier about audits, where these audit companies could gather information. They know a lot about that policy. They gather information about the policy, the insured. They should have that capability to bring that together and say, yes, the likelihood of you having value here that you consider, if you're serious about selling it, is worth you doing it.
Well, that's all the time we have for today's show. I want to thank Darwin for being on our show, our special guest and today's Money Mentor. And keep in mind, before moving forward with any of the ideas on our show, especially this one, always consult your tax advisor and your legal counsel. And remember, as the good Reverend John Wesley once said, make all you can, save all you can, give all you can. I'm Steve Savant. I'll see you next week.